Welcome to my channel again. Today I'm going to be going through a buyer's guide with you. I want to really lay everything out nice and plainly and simply, especially for first-time buyers, so you have the confidence going into this process. A lot of the time it's disorganized and it's a little cloudy and unclear. So I'm hoping that you can save this video, go over it several times, step by step. You could even take screenshots and make notes, but I really wanted to help buyers with the whole process from beginning to end, how to prepare, and just to give you the advantage in this process. I hope you enjoy it. First of all, planning your money. This is where we want to start. What do you want to spend? How much you have comfortably to spend. So that's something you need to do some work on up front and figure out. So if you go through all your finances, we'll be talking about that later. This will give you a good ballpark of where you want to hit as far as purchase price. Then the average time. What amount of time do you need from making an offer on a home to actually being able to occupy your new home? That's something we'll be discussing also. And just remember, your lender is not your financial planner. So you really want to do your homework and just be on top of the process. So you aren't tossed to and fro and taken advantage of and sold into programs that aren't going to work for you. So you need to have a little bit of knowledge on these things up front. Then you need to decide your budget early, and there's a couple of ways we can do that, and I'll be going over all of that with you too. And then know your why. Um, a lot of times the stress can be removed if you're actually very clear in your mind. If you're a family, an individual, or you're married or single, whatever, just knowing your why and why you're moving. Is it for investment reasons only? Do you have a deadline? You have to be out of your rental agreement. Is there a time crunch? Are you moving jobs and you need to be out of state? So just know your why, just have it clear in your mind, and it will change how you approach everything. Just being knowledgeable and having all of this done up front will change the whole trajectory of the process and remove some stress. That's my hope. So here's an example of a mortgage calculator. As far as having some homework done, you really want to know how much you can afford. So this is one way of doing this. Every lender offers this product. Now, if you leave a comment below, #calculator, I'll make sure you get this calculator or one very similar. Now, if you look at the top, you can put in your home purchase price, the ideal home you're looking at, how much you have as a down payment, the current interest rate at the time, the term of the loan. That just means how long, 15 or 30 years, and then property taxes, things like that. And if you have a homeowner's insurance, that will be plugged in here. Now, your monthly payment should come up here after you've plugged in all the numbers, your loan amount, interest payments, and all of that it can calculate for you in this format. So just give me plug in a comment below if you would like this, and any lender you're looking at will offer this product to you for free. So it's a really useful tool to use. Again, planning your money. A good rule of thumb is plan to spend no more than 25% of your take-home pay. So net monthly income. So having all of your tax taken out first, and if you have health insurance taken out of your salary, what is your net? An example, if it's 6,000, 25% of that will be $1,500 for your monthly mortgage payment. Now that's comfortable. A lot of people say 33% is also a good number. I think 25% is safer and will give you more wiggle room if you have other responsibilities, car payments, credit card payments, whatever. And you'll want money for repairs if you're a homeowner also. You don't want to be house poor and unable to do repairs and upkeep. So 25% is really comfortable. What are upfront costs? So we're talking, there's a lot of jargon lingo when you go into buying and selling homes. And a lot of realtors and lenders take this jargon for granted. Now, upfront costs, closing costs, what does that all mean? Escrow accounts, all these words. So I'm going to be going over and explaining some of those. So upfront costs, just money that you'll need in order to buy a home before you move in, and not including the mortgage. So your down payment, a lot of people are afraid of the thought of down payment. You're thinking, 20, 30%. Now, a lot of people are cash buyers. They have 100%. But typically your average, including cash buyers, it will bump it up. The average, national average, is 14% of the home is a down payment. Now, first-time buyers, are typical 3% is fairly typical, up to 6%, and that's not unusual. So conventional loans, if you have a fairly good credit score of 680 and above, you can do a 3% on a conventional loan. If your credit is not as good, or you're a first-time home owner, an FHA loan may be the way to go. Now, if your credit is 580 or above, you can get 3.5%. If it's 500, you really need 10%. It's a little bit higher. So depending on your credit score. Now, if you're a veteran, a VA loan is 0% or a USDA. So but your average, as I said before, is 14%. Now, closing costs, that's something else. That can be 2% and up to 4% of the purchase price of the home. And that will be things, that we'll talk about later that you will need for closing, all kinds of things. Now, out of pocket expenses, not included in closing costs, is the inspection. That's the biggest one. That's between $400 and $500, and you will cover that. Now, even if the home, you don't go ahead and purchase the home, the contract falls through, you will still have to cover that. You won't get that back. So that's just an expense that you will need to have money for. So, this is another important thing to look at, your why. As I mentioned before, are you moving? Is it urgent? You're just wanting to move, you're just wanting an investment, you're renting and you think you're wasting your money, and there is no time crunch. But know your why. It's really important to have this at the forefront of your mind when you're planning. So looking at all of this, it's good to have everything in a Google folder. Now, if you have Google or Google Drive, I recommend getting a Google Drive account, opening one up, and creating a folder. You could call it Buyer's Guide or My Buyer's Information, and pop everything in there, things you may need for your lender, all the information. Now, clarity leads to success, just being ahead of the game, ahead of the curve. And if you don't plan, it can lead to chaos and a lot of stress later on and during the process. And you really don't want that when you're going into purchasing a home. Now, one of the biggest things you're going to want to do is find a good lender. Now, there are so many products out there and types of mortgage brokers and lenders. So you want to have a basic understanding of the differences. So I would recommend finding at least two, possibly three to talk to and get pre-approved with. So you want to compare your pre-approvals and find the product that works for you the best. Now, this is not a scary thing. You'll just have to have everything in your Google folder, documents you may need, your driver's license, bank statements, your tax returns, things like that. Anything you think you may need, and your lender will tell you exactly what they need from you. So to start, there are three kinds of main types of mortgages on the market. There's your traditional mortgage broker. They're the kinds of mortgages I recommend. Now, your traditional big banks like Wells Fargo and Chase and First Bank, they also offer mortgages, and they can be fairly competitive too. And then you've got your big online lenders. They're the ones you see the ads for everywhere. Like Lending Tree will find many lenders for you. So where to find them? Of course, I can give you recommendations. Your realtor, if you find a realtor, you're out of state, or um, they work well with lenders that they trust. Now, this is a really important thing to understand, that this whole process of buying, you want your realtor to work really well, and so things go more smoothly with a lender they're familiar with, they've done work with in the past, and they trust. And they have a good working relationship. So the first person I would ask is your realtor for some recommendations. They should have at least 2 or 3 lenders that they're happy to recommend. Then ask a friend or a relative if they've worked with anyone in the past, and if they'd recommend anyone. And also, Google is not a bad place to search for lenders. Now, Google promotes good businesses. So there's something called a Google Business Profile. So as a realtor, I try and maintain mine. You have your reviews on there. And if anyone asks you questions, business questions, Google promotes and pushes businesses who are quick to respond and have the best reviews. So when you Google and search for lenders, they will promote to the top the businesses that are doing well. So that's not a bad place to look either. Now, mortgage rates, they're fluctuating so much these days. And the best place I would recommend looking is the Consumer Financial Protection Bureau. So, or the CFPB. So here's the website here. So if you go in, you will get the most up-to-date and current mortgage rates. And you know it won't be a private company trying to sell you. So this is a very reliable place to find rates. So you go in, go to mortgages at the top, and then you'll scroll down to get started. Then further down inside of there, you'll go to explore loan choices. And then at the bottom, you'll see explore interest rates. And inside of there, you can plug in some criteria, your credit score, house price, type of mortgage, and down payment, and things like that. And it should pull up the mortgage rate. Now, when you've got all that down, you're in the pre-approval stage. You found a few lenders. You want to be pre-approved. And what is this and why is it important? Now, pre-approval, it's not scary. It just means you're going to get your figures sorted out, how much you can afford, what is entailed in purchasing a home, all of the costs, the duration of the loan, the type of the loan, FHA, conventional, USD, whatever. They will figure this out for you. So to get pre-approved, it also is an incentive to the seller. If you're a buyer in good standing, your realtor will need your pre-approval letter to go to the seller with, especially if it's a competitive market and the multiple offers. You want to be pre-approved so they know you're a reliable buyer, and your word is reliable. So get all of these documents together, everything you're asked for by the lenders for pre-approval. Also put them in your Google folder, your buying folder. So you can send this entire folder over to the lender and everything's in one place and really nice and clean. It will just make everything easier. Now, what to expect? You want to carve out maybe 45 minutes to fill out this application. They will have to do a credit pull. Now, that's not as scary as it sounds. Unless you get a credit check, it's not a real pre approval. They have to do this. So it won't change your score too much, between 0 and 5 points negatively. And just remember, within 45 days, you can do as many credit checks, credit pulls, with no extra effect, no more dings on your credit score inside of that 45 days. So you're free and clear inside of that after the first pull. So again, all of your documents, all of this needs to go in your Google Drive folder. Everything that you pull, everything they ask for. So once you've done this, within a day or two, you're going to get a full quote. This will be your pre-approval letter. You'll get the loan amount, you'll get the rate, which is your insurance, your interest rate. Your monthly payment will be here, including all the costs involved. So your private mortgage insurance, your homeowner's insurance should be in there, the duration, the type, and taxes, and certainly an estimate of taxes. It will also let you know if there's a prepayment penalty, if before the duration of the loan you pay everything off in full, if you're going to be penalized for that. And typically you are not, but they'll have this in there. Their products vary between lenders and they have different incentives and different products. Not all mortgages are the same, just based on income. They do have different kinds of products. Now, this again, I will keep plugging away. Put this inside your folder. Keep it organized, your Google folder. Now, you'll want to do this with 2 to 3 lenders and ask them all for TBD, it means to be determined, but this is your loan estimate. It's a 3-page document. Now, the first page has everything really nicely condensed, so you can compare all of them side by side. You want to put them into your Google Drive folder, but you want to lay them side by side and look at the loan that will work best for you. Just go over everything. You can even ask your realtor for help choosing a loan, but it should be fairly clear to you. So here's an example of your one-page summary, your TBD. So if you look at it, you'll see over here is the loan term at the top, 30 years. The purpose of the loan, purchase a house. The product, it's a fixed rate. Is it conventional? FHA, VA. It will have it here, the loan ID number, the rate lock. Is your interest rate locked? That would ideally be a yes. Now the loan amount, the interest rate, monthly principal and interest. Now prepayment penalty, you want both of these to be no. You want this to be no and balloon payment no. So it's down here also this is to do with insurance. Mortgage insurance, as you see here, drops off after 8 years, which is good. So estimated closing costs and your estimated cash to close. So these are all great numbers to have right in front of you before you even go into looking at homes. You want to have this nice and clear in your head. So this is a good thing to do. So what's next? You have all your summaries, your 3-page TBDs. You want to place them side by side. You want to compare and pick the one that's good for you. Now, after you've had this pre-approval done, you really want to keep things steady and simple. You don't want to be moving large amounts of money around because you have already declared how much you have in your bank account for the down payment. So don't use any large amounts from that down payment to pay off anything. You want to keep it in there. You don't want to change employers because you're going to have to start the whole process over again. So that's not an ideal. And don't skip payments. If you have credit card payments, car loans, anything else, make sure you're current with those. This is just good practice. Next thing I want to talk about is how do you find an agent? Now I'm here. Of course, I can be your agent. Just let me know. My information is below, my email and phone number. But out of state, I have a whole slew of realtors I would highly recommend all over the nation. Now, outside of that, there's Google. Google, as I said, with finding a lender is a great place to find a realtor. You have the Google business profiles, and depending on how the reviews come in and how the realtors manage their accounts, Google will promote people in good standing. in business. So they are fairly reliable, and I do like that as a platform. Now, of course, ask friends, ask relatives. That can be reliable, and make sure you have with your realtor an exclusive buyer's agency with them. You don't want to have a transaction broker who is the broker, the realtor who's selling the home, because they can't really have advocacy for you. They can't advocate for either party. They have to be neutral. So you really want someone who's going to be able to take your side and speak for you and on behalf of you. So that's really important to have an exclusive buyer's agency. Then again, I would say trust your gut. If you're speaking over the phone, you have a meeting, an initial meeting with a realtor, you're just interviewing to see if they're a good fit. Really do listen to your intuition. It's very, very important that you have someone you know you can work well with. If something is not feeling quite right, things won't become easier as the stress increases. So it's really important to find someone who's a good fit for you personally, as well as recommendations. Now, if someone says, look, I've been selling homes for 40 years, who cares if they're really not an easy person to work with? It's really not that difficult to help people find a home. Now, just trust your intuition. Now you have your pre-approval done. You've found a realtor you like and trust. Where do you start with finding a home? So they said in 2021, I think most people's homes were found on Zillow and Redfin. So we know you're all doing your own research and you have a list of homes that you're going to be asking your realtor to look at, which is great. That's fine. But your realtor will be plugging in all of your recommendations, everything you want in a home and need in a home. Um, and they will plug it all into their MLS, and you will get updates regularly via email. And I would trust these over Redfin and Zillow, because it is more accurate, and it's your realtor who's going to be feeding this to you. It will be automatic also. Now, remember to stick with your maximum amounts in your pre-approval. You don't want to be looking for homes way over your max amount. You've already done all of this work and you've been pre-approved. You want to kind of stick with that. You don't want to be disappointed if you become attached to a home. Now, that's the other thing. Don't become emotionally attached to a home until you're close to closing, because it can be very disappointing if it falls through. So remember your whys. Why are we doing this? Remember your whys over your wants, your needs over your wants. So that's really, really, really important. Now your wants can come in at the last minute. If you've got it down to 2 homes, they can come into play there. But until then, remember the essentials and the things that you cannot live without, and prioritize those. And don't rush. The right home will come around. And of course, you don't need to look at every home. Make sure you're looking at them online. That's great. Do some virtual home tours, but you don't need to stress yourself out and everyone else by looking at every single home that is potentially your future home. Narrow it down. It will take the stress off and make the process more enjoyable. Now you've found your home, how do you make an offer on your home? Now, this is how it works. This is really the negotiation stage. It's not only the house price that you're going to be negotiating. You're going to be talking about other things, like you're going to have them inside of your contract. If there are seller credits you're looking for, inspection periods, personal items you may want inside of the contract, the seller may be offering, repairs after inspection, what you're willing to settle on. All of this goes into the contract. And if you're willing to pay, example, over, if the appraisal comes in slightly over the cost of the home, are you willing to pay that difference? And we'll talk about that later. I know it sounds a bit jargony, but you will put all of this together with your realtor into an offer. Now, what will happen is your realtor will send this to the listing agent and the sellers, and they will see your offer, go over it, and either accept it or they will counter it. And all that means is they will go in to your offer, and if they want to amend anything or change anything in your original offer, they will go in and do that, and this will be a counter offer. So you will get this back. It may be a day or two, and you can either accept this or reject this counter offer. So this is more typical than not. It's very rare that the original offer is accepted, especially in the highly competitive market we've seen of late. Um, Sellers can be very, very picky if they have multiple offers, so they can often counter and to their advantage, and everyone's always looking out for themselves, but you want to go over this counter very carefully with your realtor. Now your contract has been signed. Everyone's happy with everything inside of the contract. And remember, your contract is a legally binding document, especially when it's been signed. So it's really, really important that this is your guide. Everything is in there and will guide the next 30 days up until closing. And one of the first things to happen after you've signed on this contract is the home inspection. It's very, very important. You want to make sure this is going to be a good purchase and a good investment. So you choose the inspector. Your realtor will probably recommend a couple. So it always comes back with needing work. I haven't had an inspection that has been blank. I said everything's 100%. That just doesn't happen. Very, very rarely. Even with new homes, there'll be a list of things that need some attention. They won't be major typically, but inspections are a really, really important part of the process. Now, when we were in a very, very aggressive market the last couple of years with multiple offers, people were bypassing inspections, and much to their chagrin now, a year or two out, there's a lot of regret and a lot of horror stories. So inspections are very, very important. I will never tell anyone to pass on an inspection of a home. So don't freak out. There will always be things on your inspection. This is the big make or break period too. So um, this is where contracts can just, dissolve, or you can back away. If the inspection comes back, there are major structural problems, foundation, or say the roof needs repair and it's been too long from the damage having taken place, so it's uninsurable and it's a cash repair, things like that, and the seller's not willing to do it. You just never know. So this is a point in the process where you can walk away, and it's inside. There is something called an inspection deadline. So you have a certain amount of time where you can walk away up to a certain date, and you really need to know what that date is, where it's safe to walk away legally, because this contract is legally binding. So it will be your guide. So the inspection's back, you're happy with everything, you've gone back and forth with the sellers, and you've negotiated how to do repairs, and everything's good. So what's next? So this is the underwriting process. You were pre-approved for your loan, but it wasn't a full approval. So they want to finalize this pre-approval and make it a full mortgage approval. So your lender will need more from you, no, more documents, more information. This is very, very normal. So don't worry when the lender gets back to you asking for more pieces of information. They may need up-to-date pay stubs. They may need the contact information for HR to make sure you are working with your employer. They may need a month of bank statements, things like that. So your loan may be passed on to a processor, an underwriter. They may outsource it, but your mortgage is still going to be with your lender of your choice. Nothing will shift there. And this is a point where you need to find homeowners insurance. You can shop around to make sure you're covered for fire and natural disasters, things like that. But that's an important thing to have, and that is up to you to find. The last step, really, before you're fully approved for your mortgage, is getting your home appraised. Now, with all your documents in the last section for the full approval, you can send that file over to your lender with everything in there. It makes it really streamlined. The big thing next is getting the home appraised, and that's the lender's job. It's really for them as a security measure. So, ideally, the appraisal will come in, which is the value of the home, according to an appraiser, at the purchase price. So your loan is determined on the lower number. I'm going to explain what that means next. But this report will be sent from the appraiser to your lender, and your lender will make sure you have a copy, but you don't need to lead this process. It's really your lender's responsibility. So this is how an appraisal works. So this determines your financing. So say your purchase price is 550,000. So your appraiser goes in and they find the value of the home to be actually 559, which is great. You're above the purchase price of the home and you have $9,000 in instant equity. So this is a good deal. This is a really good outcome from your appraisal. So your loan will be the lower amount. As I said earlier, so it will be for 550, this amount here. So you will have $9,000 in equity in your home. Ideal. Now, if the lender comes back with an appraisal of less than your purchase price, there's a little bit of a problem here. So your purchase price is 550,000, but the appraiser said it was valued at 545. You have a deficit here of 5,000. Now your mortgage company is going to lend according to the lower number, so they will only approve a mortgage for 545,000. So that extra 5,000 you need to purchase the home, you will have to either find in cash or you can renegotiate with the seller. There are many things you can do as far as even inspection items and repairs that need to be done. You can find a way to meet halfway with that. There are many things to do, but typically your mortgage will never be over the appraised value. So now all of that is done. You're fully approved for your mortgage. You've found the home. You're inside of the contract and you are clear to close. So you can kind of sit back and relax. You'll get this notice from your lender and they will send you the closing disclosure. This means everything will be listed, the things you need to know and do, and dates and times for closing to take place. They will give you the name of the title company, the address, where to send your down payment, where to wire it or have a cashier's check, the dates to send it, how to send it. It will also have in there the closing dates and times, where it will take place, what time, and who will be there. Everything you need to know for closing, your lender will make sure is inside of this closing disclosure, which is a really nice thing to do. So you can kind of take it easy now. The hardest work is done, so you can sit back and relax. Now, when you get your closing disclosure, you'll be able to review your documents. Now, inside of your Google folder, you should have both the documents, both your pre-approval, your TBD, and your final full mortgage approval. So I'd lay them side by side and compare them, see what changed, if anything changed at all. And if anything did change, it's probably taxes may have fluctuated slightly inside of that time period, if it was 30 days or more. And if anything has changed, also it may be your insurance. Now, otherwise, everything else should be steady. You should have locked in your interest rate. and the purchase price of the home according to the appraisal. So they should be very, very similar, but just look and see what's changed. Go over both documents. And then inside of your a contract, you will have the date for the final walkthrough. All this means the final walkthrough, you'll go into the home, your realtor will set up an appointment so the sellers can leave, and you will walk through your new home to make sure all the inspection items have been taken care of according to the contract, and to your satisfaction. So you really want to have a list of everything that needed to be done and check it has been done. And if it has not and the sellers are unwilling to budge on those things, you can also walk away. You do not have to go to closing if there are major items and problems here, but this is very rare. But you do want to be careful to check these things out. Now, what happens at closing? The final steps. You're coming to the closing table. Now, in the old days, everyone would be there in one room at the title company. So you would have the sellers, you would have the listing agent, you may even have the lender or someone representing the mortgage company, especially if it was a friend. I've seen that happen. Your buyers, you will be there, and your realtor. And then, of course, the title rep. So, this is the person at the title company who will be presenting all of the documents, the contract, to sign all the paperwork. They'll have it all printed out, all the numbers, everything figured out. And don't worry, it can be a little intimidating first time. There is so much there. It's a huge stack of papers. Now, in the UK, it's a fraction of the number of pages you have to sign, but everything's different in every country. So, Americans like their massive stacks of papers. So, um, typically these days, you will have the sellers. They will go into the title company the day before and they will sign all the paperwork over to you before you go in. And then at a separate time afterwards or the next day, you can go in and sign all of this paperwork that they need at the title company. Now, the rep will go over absolutely everything you need to sign, what you're signing, and where you need to sign it. Everything will be highlighted and very, very clear. But you want to make sure that as you go through this paperwork, you understand it. You want to ask questions. This is the time to ask questions. Don't be confused. Ask your realtor and ask the title rep what you're signing and why. And do not hold your peace. Please speak up. So typically, this is where you'll get all your closing documents at the end of closing. You want to keep them safe. You could get them electronically. You could get them, I'd get them physically, and put them in a Google folder. So everything's in one place. You should get your keys and you can occupy your new home on that day. After you've signed everything, you can literally drive over there and start to move in, unless there's something in your contract saying the sellers will have occupancy after closing, which is pretty rare, but it can happen if you're fine with that. So according to the contract, you should be able to move in. Now, the first payment and owning a home. Now you have your home. What happens after closing? So, your first payment is usually due 30 days after closing. Um, Now, inside of your payment, you'll have your mortgage as far as the principal and interest. That shouldn't change out the years. Then you'll have your fixed rate loan should be steady throughout the duration of the loan. So the 30 years, if it's 30 years, it will stay the same. Now, the only things that can fluctuate are taxes and insurance. They may change over the years. Now, as house prices increased quite dramatically recently, people saw their taxes increase also quite dramatically, and that will change your monthly payment. And homeowners insurance or PMI, those may also fluctuate slightly up, tick up a little bit, but not too dramatically unless you have very dramatic changes in the housing market. The taxes will also change quite a little bit and typically up. So now your lender will hold You may hear escrow. Now, what is an escrow account? It's an account that your lender will hold for you. So typically, taxes are paid twice a year, and your insurances, your two insurances, homeowner and PMI, they're paid annually, typically. So what your lender will do, they will make sure everything's even for you, and inside of your monthly mortgage payment, all of those are split up throughout the year. Your taxes and insurance are inside of that monthly payment, so nothing should change throughout the year. They will keep all of the taxes and insurance inside an escrow account in your name, and they on your behalf, they will pay your taxes and insurance for you out of that escrow. So that's a very, very simplified version of escrow, but that's basically what it means. So I hope this was of some help to you. Please watch it over, save the video and take notes, screenshots, and any questions you have, please make a comment below. My information is below, my email and my phone number. Don't hesitate to get in touch. And again, if you want the mortgage calculator, please plug in #calculator. I'll be really happy to send that on to you. And again, thanks for watching.